It's saying store on farm, don't store off farm corn. The market, if you had, as again, the market's telling you to store corn, it doesn't tell you whether you ought to hedge it or whether you ought to just leave it unpriced. There's two different things. If you did hedge it in the fall and stuff, I don't think the market's particularly told you to pull the trigger yet, given where the basis is. You know, if it is unhedged and you're doing it, then you still have to make the price projection, but the market's still saying, in a speculative sense, if you're going to keep the corn, it's better to store it on farm than a basis contract. The opposite is true at an elevator. If we look in here, to me there wasn't a whole lot technical. We've just been trading in a range quite a while. We've taken quite a bit of time to work it up. The market dropped sharply. The market's almost making no effort to close this gap right now. And given we probably, unless something happens strange in South America, we're probably not going to have very much new information for a couple months. So I want to particularly see that going up. The futures price going up, there might be some basis appreciation. Or if something happens, the dollar falls real quick, which drives oil up. And the oil price going up will have a bigger effect due to the dollar than actually making our corn cheaper, because people don't buy that much extra corn at a time. We can then start putting more stuff through ethanol plants a lot quicker. There's still a lot of risk in the market. This is March futures. It's a little lower than this right now. As you see there's still, as I say, there's an 80% chance we'll be between these things. It's about a 60 cents upside and a 40 cent downside on that. Otherwise, there's still a lot of risk in the market. Where does that come from? Someone find out some of the numbers are wrong. Something happens in South America. Something happens to the dollar or oil. Any one of those things could make the market jump pretty suddenly in one direction or the other. The other thing, I think at this time the market's actually pretty optimistic about the world economy and the U.S. economy. Not optimistic in the sense that all of a sudden we're going to tear off, but optimistic in the sense that we've hit our bottom. I tend to be kind of middle of the road and feel about the same way, but I'm not super confident in it. Okay, there's still a bunch of things that can hit the market yet. We still have a lot of mortgage things coming on. We have a lot of mortgage resets still coming up. And there'll be, and how well the financial market takes care of it after they're done with their bonuses, we'll see what happens. I wouldn't be complaining if I was getting it, but I'm not, so. I don't know, someone said I wasn't supposed to say anything politically bad in front of this camera. I don't think I'll get in trouble for that one. That wasn't political, that was some people really screwed up. And then they admitted yesterday, but still should say they get their bonuses. I could go on for that about quite a while. Actually, I have no problem with bonuses, but I want them paid in the next 3 to 10 years. Make them stocks, and if they pay off for you in the next 3 to 10 years, then you could have that even if, anyway, you leave the company. Things can be fixed, folks. It just isn't happening. It's a little interesting here. We're seeing a little bit in the same market on July. It stabilizes relative to the drop. There's tons of risk. Of course, July futures are also affected a lot by the growing season. It's interesting here, and you say there's only a 10% chance we only go down about $1, versus to get to the top 10%, there's about $1.40 in there. So there's a lot of risk in the market. And I don't really know where the market's going up, and neither does anybody else, even if they say they do. That's a comment I have lots of confidence in. Can you afford this, and can you make it on this? That's really the things that you use this type of chart for. Can you take the chance of something down there happening in order to get that upside potential? Of course, you don't have to put all your eggs in one basket. It's really a matter of a person needs more protection, you price a little bit more, and a person that can take a little more risk and price a little bit less. Here's the corn yields as I start looking, because I think it's important that we start looking into next year. this is my trend line going back to 1978. Okay, this yield isn't on here. Okay, I've been I like long time series because I think any short time series, this time it turns out USDA's right. About 3 years ago, they switched to a time series from 1991, and I am now. First I used my trend and not their trend, and then the last 2 years I've used halfway between their trend and my trend, and I broke. I'm using their trend. These yields are amazing, as I talked about a little bit earlier, and that would be about 160 bushels an acre trend yield. The other one here, if we look at it, is significantly lower. It's about 156. So we're talking about a real difference, an amazing difference. If you go back to this one here, you can go back almost at least into the mid-60s before it was increasing a little bit quicker, and the trend stays the same. If you look at this one here, if you start shortening the time period, it turns out the trend stays about the same. So granted, maybe we'll plateau and start going up a little bit smaller for a while, but I don't think that's probably the case in the next couple of years. Now that doesn't mean that we can't have a yield down here next year, but it'd be weather related, not a slowdown in technology. How do I look at get next year's acres? Last year, these 6 principal crops, we planted a little over 245. This year I'm thinking we're going to plant about 246 of these different crops. There's about 2.7 million acres come out of CRP. If you go back 1 year, we planted about 248 or 249. So this, I mean 247 or 8. So this number isn't high compared to a number in the last few years. Where do I get? So I'm basically saying, let's look at this wheat number. Here's down 6.2. We got some more acres from the CRP coming in. Plus we have those acres that for some reason weren't planted last year, and we know there was some planting problems as we went into last year. So this is down 6.2. Now of that, about 2.4 or 2.6, somewhere in there, is the soft red wheat. Okay, there's two things that happen there. Some of that soft red wheat was wheat with soybeans growing on top of it. That will just be soybeans this year. So that doesn't really get us any extra acres. But that's south to sort of the bottom third of Indiana, Illinois, and that forth and north. So I think about 1 million acres of that goes in that direction. The rest of them go to corn and soybeans, and that alone will get me this. But it doesn't take all of it. Will get me to 3 million extra acres of corn, and I'll show you where I think that might be important, and 1.4 million acres of soybeans. Okay, these are my numbers, although a friend of mine from Kentucky thinks as weird as I do, and we came to the same numbers yesterday. But a person who did the same thing, but retired early because he could consult. People listen to him. But cotton, I expect to go up a little bit. A lot of those wheat acres are in Kansas and Colorado and Oklahoma, where we wouldn't expect corn. So I expect sorghum to go up. And by the way, this sorghum number was up a little bit because a lot of that area is a little bit more rice and a little more barley to get us to those numbers. So I think at this point, with the prices and the lower cost of corn inputs, I think we're probably in the ballpark. So let's see where that takes us.